Yo, what's cracking, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Solana analysis video. Now, I chose to do Solana today because that is the talk on crypto Twitter. Everyone is talking about Solana primarily because of the rally that it's seen over the past 24 to 48 hours, and I'm also noticing a lot of FOMO build up on Sol. A lot of people are sort of upset that they let go of their bags because of the volatile breakdown that Solana saw post the FTX debacle. So you're seeing a lot of FOMO, a lot of people jumping back into their big positions. So I want to really address that, and I want to give you my macro view on Solana's technicals as to when do I see this trend really shifting, because while these markets are rallying on your lower time frames, specifically crypto. I'm not going to say markets in general because I have not really looked at many of the traditional charts today. But as far as crypto is concerned, everything is rallying on your lower time frames. I'm noticing that, okay, these rallies are happening, but guys, the higher time frames, the trend is still very much in a downtrend, okay? We still need additional price action in order for these pictures to really flip from bearish to bullish, okay? So that is something to keep in mind. Prudence is always going to be key. So of course, we're going to be talking about Bitcoin and Solana today. I will also implore you guys to smash that like button if you haven't already done so, because it goes a very long way for the channel. But more importantly, if you guys just want to wait until the end of the video to see if you derive any value from here, I think that is completely fair. And by all means, you can wait until the end. Now, in addition to, the agenda for today's video, I also wanted to bring up something that I saw on crypto Twitter today, and that is I found someone today comparing the 2019 reversal and the economic landscape that we saw back then to 2023. This person basically drew parallels and said that, okay, we turned in 2019 based on this criteria. We're going to do the same thing right now in 2023. And this is what the person said. As far as the economic landscape is concerned, Jerome Powell was the Fed chairman there as well, okay? And back then, too, he was dabbling in quantitative tightening, okay, which is them essentially effectively taking out liquidity from the market. In addition to quantitative tightening, Jay Powell was also increasing interest rates back in 2018, 2019 as well. Now, what really led to the turn in that market, this is supposed to be an R, apologies for the very messy handwriting. But anyways, what led to, the turn in markets back then was on Jan 2019, which is this candle right here. Jay Powell came out and unequivocally said that, hey, they're going to be stopping quantitative tightening and the rate increases. Of course, he didn't sound as excited as me, but the market took that as it was, and markets rallied, not just Bitcoin, but traditional as well. Everything took a turn. Okay, now the main analysis that I saw on crypto Twitter today, if you even want to call it an analysis, was that this person was drawing parallels to 2023. And the speculation is that, hey, Jay Powell could likely come out on Feb 1st, which is when the next FOMC meeting takes place, and say that, hey, okay, you know what? QT as well as rate increases is going to come to an end. Okay, and that's what's going to lead the markets to rally. That is a very, very, very shallow analysis, guys, because there is one key ingredient that this person is missing. The main problem that the markets faced back in 2019 was deflation, okay? What we're seeing right now is the problem of inflation. This is too key an ingredient to simply leave out when drawing parallels between the two market conditions. Okay, so back then it was deflation that was the problem. Right now it's inflation. So we cannot leave that out. They're still trying to achieve the inflation number of 2%, which they're nowhere close to just yet. Okay, so these rate hikes might very well prevail until they actually meet that expectation, unless Jay Powell comes out and says that, okay, they're actually putting a stop to it. Alrighty, so we'll still have to wait on the proper information to come out and the proper decisions to be made in order to really anticipate the next turn in the market. Okay, so remember, imagine he said that in Jan 2019 and you still had time to get into your positions before the market actually turned. So I brought this up just to let you guys know to be careful when actually looking at different analyses that's posted online, especially when people are drawing parallels to, well, previous market conditions. All right, always question it and always do your own research. Now, as far as the events of this month is concerned, I've gone ahead and amended it to include the dates. So we have FOMC minutes that gets published tomorrow. We have the job reports that also comes out on Jan 6th, which is day after, CPI reading that comes out on Jan 12th, and the FOMC, the next FOMC meeting that comes out on Feb 1st. Now, depending on the outcome of these numbers, markets are either going to rally or dump from here. But if you had to ask me what are the key sort of reports that I think is going to make a difference to the market, it's going to be jobs, okay, and CPI, okay, Jan 6th and Jan 12th. I think these two might very well really affect markets in the short term. Okay, last time, basically the month of December, it was the job reports, the unemployment rate that led markets to rally. Okay, so watch out for these two dates specifically, Jan 6th and Jan 12th. Okay, and then FOMC, of course, we have time for that, Feb 1st. Alrighty, as far as price action is concerned, nothing much has really changed on this chart, considering volatility is still super duper low. For those of you looking to put on trades, I suggest checking the altcoins instead. Alrighty, so as far as Bitcoin's price action is concerned, we're primarily going to be focusing on the recipe of a potential market reversal. Okay, because I do believe there's likely going to be a cascading play contingent on certain levels being taken out. And also I want to bring to your notice that there are levels currently drawn out on my chart that have grown drastically in significance. Okay. So as you can see, nothing much has really changed on my chart in that we're still seeing 18.7K as overhead resistance. So we're looking at a zone of price action, right? 18.7K overhead resistance, 15.8K support underneath, and the midpoint coming in at 17.2K. Now, ever since the FTX breakdown, Bitcoin has not even managed to take back the midpoint. Guys, not a single weekly candle body close over 17.2K. All right, so for starters, what we're going to be looking for in order to anticipate a market reversal is for price to start living over $17,200. That is going to be criteria number one. Okay, after which I will then be looking for price to make its way all the way up to 18.7K. Because for those of you who've been following my analysis for some time, you guys know I use the midpoint to really give me an appropriate edge in really understanding who's got control here. Is it the bulls or the bears? You know, what side is it better to be on? The bullish side, a long position, or a short position? Getting back up over 17.2K is going to give the bulls an edge here. Alrighty, so 18.7K is going to be on the books next. Now, is there anything alluding to us actually getting up over 17.2K and taking out that midpoint? Well, for that, let's get on over to the daily time frame, because there is a potential pattern play here that I see on this chart. Okay, and this is it right here. The cup and handle like formation, nothing much has changed. I will be looking for Bitcoin to take out these highs right here on the lower time frames. Let me just zoom in to this picture. Okay, taking out the highs right here is likely going to help Bitcoin get up over 17.2K and then consequentially 17.8K. Okay, for the cup and handle to trigger, however, okay, we need to take out the neckline. The neckline falls directly at 17.8K. So that's why 17.8K suddenly becomes a critical number. Now, if this pattern triggers, let's go ahead and take the measured move off the cup and handle formation, okay? Place it on the break. Let's go ahead, place that on the break. Where does that take Bitcoin up to? $20,500. Now, this is going to be very, very key. I'm going to go ahead, draw a line right here, mark that green, okay, green for measured move. And now, okay, that is the measured move of the cup and handle formation, but we do still have 18.7K to be taken out still. Now, for those of you who've been following us for some time, you guys know that we've been looking at the mango dynamic indicator as well, right, to help us really understand whether or not, or rather when, should we be expecting a reversal. Now, the 4-day dynamic and the weekly dynamic have been our go-to indicators on those timeframes respectively. Now, if you'll notice, the previous bull market right here from 3K all the way up to $14,000. Ever since when Bitcoin actually took back the mango dynamic indicator, we trended over that. It was only the loss of the dynamic that marked the beginning of that intermediate bear cycle for Bitcoin. Right now, this was the COVID rally, dump and rally right here as well. Taking back the dynamic was the hint. Okay, and then right after that, we trended on the dynamic all the way up to $60,000. Losing it here was that first time that basically gave everybody the signal that, hey, the music is likely stopping and stopping soon, so get ready to position on the other side of the market. Okay, so now we saw a nice big fat consolidation over $40,000, $60,000 to $40,000. Volatility had really picked up. However, this was that ultimate breakdown, and then ever since then, every touch of the dynamic had been met with resistance except for one fake out right here, which gave us a tell in that, okay, we broke down once again, short the retest of the dynamic, and boom, down we go. Now, ever since then, once again, every attempt at the dynamic was met with resistance. However, if I zoom into this picture, now I want you to look at the horizontals, our key horizontals that we have that have nothing to do with the dynamic and the dynamic indicator. So we have 18.7K as overhead resistance, right? But where is dynamic resistance coming in at? 18.5K, guys. Okay, and that's why now 18.7K has gone up as far as significance is concerned. Taking back 18.7K is going to be that much more bullish. Okay, I told you guys in one of my previous videos that, hey, I'm going to be knocking off my bid at $13,000 if we take back 18.7K. Now, this is not only going to lead me to knock off my bid, but with what's left of that knocked off bid, I will also be buying on the retest of the 4-day dynamic. 18.5K is where dynamic resistance really comes in at. Okay, so mark that out on your charts, and that's why this entire zone now is going to be so important, okay, as overhead resistance. Taking this out is going to make things very exciting for Bitcoin. Now, how about the weekly time frame? Where is the dynamic sitting at on the weekly time frame? Okay, dynamic resistance is currently sitting at around $21,500. Okay, but notice how I have that green line. And remember, that green line is the measured move of the cup and handle-like formation. If we make it up over 18.7K, I'm saying, you know what? That measured move is on the freaking books. From the neckline of the cup and handle-like formation, which is here at 17.8K, to the measured move, that's a good 15% to the upside. But it's not just the measured move that makes this all much, much more exciting. It's what happens after and what it really threatens, because there's an equilibrium that the measured move really threatens, and that's this. Okay, now this is what I'd sort of knocked out on my chart initially at the beginning of the video, which is this falling channel, falling broadening wedge. If we actually make our way to the measured move of the cup and handle-like formation, that will also help us break the falling channel pattern to the upside. Okay, this too will have a cascading play now, because breaking this, guys, okay, breaking this, the measured move will take us up to 25.4K. Let's go ahead and mark that out with another measured move line. Okay, green is measured move, guys, green is measured move. Okay, now let's go ahead and put on the Mango dynamic indicator. Where does that take us up to? Takes us up above the dynamic. If you guys want to see how price has reacted off of the dynamic indicator ever since the breakdown, we broke down right here. This was November 2021, where price was sitting at $50,539 per Bitcoin. The next few tests of the dynamic has been met with resistance since then. Okay, so getting back up over that is also going to mark a massive, massive macro shift in trend for Bitcoin. Okay, so this is the cascading play you guys need to watch out for. As far as 13K Bitcoin is concerned, keep it very, very easy for yourself, honestly. Don't complicate the downside on this. It's not necessary considering we're still in a downtrend. The downside is the easiest side to be on right now, right? Which is going to be us essentially taking out these wick lows right here. Okay, taking out those wick lows and closing underneath 15,850 is likely going to send Bitcoin cascading lower onto $13,200. All right, that is the next critical level that I look for Bitcoin to graze, contingent on us breaking down. Now, here's a quick tip for those of you in the Mango Seed program. If there's any module that you guys should be rewatching, I totally suggest rewatching Institutional Order Flow. And yeah, that's it. Module 7, Institutional Order Flow and Market Mechanics, because that's going to give you some additional insight in what the institutions are doing and what to really look out for when it comes to, well, price action on the chart as well as the orders on the order book. Okay, that'll give you more of a tilt as to, you know, what to expect. Can we actually expect a reversal in trend here? I initially restarted watching the Mango Seed program primarily for the oscillator and divergence module, which is this one right here. because if there's anything that really sort of caught the last market reversal from 3K to 14K, that was actually the divergence plays, believe it or not. Like, there was no horizontal, there was no support and region resistance historically that caught it. However, the divergences and the momentum oscillators did. So I focused on this only to go and find that the institutional order flow module was like, oh, shoot, I ought to be looking at that. So I say give these two modules a rewatch with a focus on institutional order flow. Alrighty. Now with this, we can actually move on over to Solana. Okay, so this is Sol's chart. As you can see, I have been dabbling on this chart. I have some crazy critical levels at $5, which did not pan out as the bulls managed to pick it up before that. But so far, why people have been drawn to Solana over the past 24 hours is primarily because of the volatility that has kicked in on this chart. Okay, now I just want you to focus on this current weekly candle, okay, which is already a good 38% to the upside. But it's not just 38%. Guys, Solana has been rallying since last week. It's this candle, which is, yes, 38%, and the wick of the previous candle. So in total, Solana over the past 1 week has done a good 78% to the upside. Now you ask yourself, do you want to be buying into a 78% pump? Because that's what people are giving me the impression that they want to do. They want to be buying right here. Now, I'm not saying don't buy Solana. I'm just saying be smart about it, okay? You don't want to be buying up against resistance because, mind you, we are up against resistance at $14.67. Okay, so we're very, very close to resistance right there. And that's why I'm saying prudence is going to be key. Now, I will be giving you my thoughts on this chart as to what I think is going to be the next best play for Sol and what I personally will be waiting for. Yes, in my opinion, I think Sol's chart is alluding to this being a patience game right now. Okay, patience and prudence. I am not looking to FOMO into a long position right here. Eventually, if I get the right bid, I will get a Solana position, but not here. Okay, so now before we jump into this analysis, let's get on over to the Mango dashboard to see if the dashboard caught anything that maybe we did not. So you can see here, Sol USDT, as far as volume is concerned, it's up there with Bitcoin and Ethereum. So the volume has pushed it to rank 3. Okay, we did get a bullish long signal on the 4-hour time frame. If you actually managed to catch the signal on Sol, which came in 4 days ago, you're already up on your trade by a good 40%. Okay, nice. However, volatility flashing 100. Now, what is that really telling us? Guys, volatility on the dashboard goes from a spectrum of 0 to 100, where 100 is like super, super duper high volatility. And usually when you see that, we can then anticipate the next sort of pullback to the downside, something that will cool off the volatility on the prevailing trend. Okay, so usually when I see vol at 100, I'm looking for the next pullback. Okay, I'm looking for a move against that prevailing trend. Okay, something that will get me a better bid. Now, the 4 hours telling us that we can expect a pullback soon. How about the 12-hour time frame? What is the 12-hour telling us? Sol USDT, once again, top 5. This, we got a long trend signal, so a bullish long trend signal 1.3 days ago. And if you caught a trade based on this, you're up by a good 23% on that trade. I'm going to go ahead and put an alert on this. Okay, now as far as the daily time frame is concerned, okay, daily is still neutral, so that 12-hour and 4-hour trend has not yet cascaded onto the daily time frame, and that makes a lot of sense, right? Because this was a rather volatile move for Solana. So if I take you guys on over to the weekly time frame, and here it is. So this has not really established any proper trend on your higher time frames, right? We still want to see like an ebb and flow in price action, something like this, for it to really establish a trend. Now, as far as Solana's play is concerned, I personally would not be buying against resistance. From where price is at right now to overhead resistance, allow me to just mark that out. From price at right now to overhead resistance, which comes in at 1467, that's a good 6.6% to the upside. Sure, you can try that trade, but please note that you'll be buying in the middle of the freaking range, okay? When it comes to trades and really getting in those good positions, it's about getting high probability trade setups and not buying in the middle of the range. Because when you buy in the middle of the range, you're putting yourself in a very, very precarious situation when it comes to actually managing your trade. Because if price then moves against you, I want you to picture yourself buying here, okay, in the middle right here. Price moves against you, and now you're suddenly sweating your pants out in that very, very uncomfortable situation. Right now, you're suddenly chart staring, and then you start making decisions of a trade that you took primarily on, say, the daily time frame. You start making decisions on that trade on the 1 minute time frame, right? And that's just not a fun place to be in, guys, all right? You do not want to be doing that. So that's why I say get high probability trades on good critical levels. Alrighty, so now as far as Solana's next good trade level is concerned, I'm seeing 2 here. Now, if we go based off of the dashboard is telling us that, hey, we can expect a pullback sometime soon based on this crazy increase in volatility. And I'm in agreement with that. Now, for me to really anticipate the pullback, I'll be looking at where the trend is currently being established, right? It's either on the 4-hour time frame or the 1-hour time frame. Okay, it's the 4-hour. Let's go ahead and put on our Ichimoku. But so far for this trend to break, I'll be looking for the 10 SMA to be taken out. Okay, I think the proper bid opportunity on Solana would be $12.13. If we get lower, then all well and good. But why I like $12.13 is primarily also because that is the weekly zone. Right? Historically, it is that level that prices actually managed to hold, not only in November of 2022, but also right here during the bull market markup phase. Okay, so it's got some historic significance as well. $12.13, in my opinion, is going to be the better bid opportunity to be had. Okay, and yes, patience is going to be key, because what is the move that we're looking for to the downside? From where price is at right now to 12.13, that's a good 12% to the downside from here. Right, and I think that is highly plausible considering even just this Ichimoku setup on the 1-hour time frame. If we actually start breaking even, say, the 21 EMA and the Tenkin, now suddenly we have a good C-span trade on our hands, right, from the Tenkin all the way down to the Kijun. That's going to be a very nice swift trade to the downside. Okay, breaking the 10 SMA could be your first glimpse into growing technical weakness on this chart, where we get an M-like formation. Okay, and then a breakdown if we break $13.35. So this would be one angle on catching a trade on a critical level at $12.13. The other potential trade setup would be, okay, if price is showing strength, all right, and we're up against resistance, you wait for price to take out resistance. Now, I want to drive in the point as to how critical a level $14.67 is, essentially that region of resistance that we are currently up against. Okay, $14.67, this is it right here on the weekly time frame. How about the 4-day time frame? What's it like? Is it being respected on the 4-day time frame as resistance as well? And yes, it is. Okay, this is it right here. How about the 3-day time frame? 3-day as well. Let me just fix my scale. 3-day as well. Resistance on the 3-day. How about the 2-day? Is a resistance here too? And yes, $14.67 resistance on the 2-day. How about the daily? Same thing on the daily. My goodness, how about the 12-hour? Oh my lord, 12-hour as well. Okay, so this is very, very important resistance. Do not buy up against this. Don't be ridiculous. What you can wait for instead is wait for price to take out $14.67, and then you can then manage your trade off of that level. Okay, the time frame will be up to you, but when I see volatility pick up this much, I tend to reduce my position size. So just a quick heads up on that. Now, between a potential trade 1 where I'm buying at $12.13 and a potential trade 2 where I'm buying the breakout, of course, I would rather trade 1 at all times. Okay, it's just way easier to manage your trade on the pullback. Okay, because if price breaks $12.13, there's a good chance I might actually get a retest of $12.13, and I either get to exit at a minimal loss, break even, or hell, if I do well, if I execute well, I could even end up in a slight profit. Alrighty, but these are the levels that I will be looking for. These are the 2 potential trade setups that I personally will be waiting on. Alrighty, don't jump the gun on this. We're currently still up against resistance. I know this is inducing a lot of FOMO, and those of you actually dropped your bags post the FTX debacle, but I'm going to ask you guys to keep your emotions at bay. Do not let your emotions guide your trade execution or your trade planning, because then that's going to put you in a very, very sticky spot. So if you think that your FOMO is taking over, take a step back, check yourself, go for a walk, and only then come back into the charts. Alrighty, now I hope you guys liked this update. If you did, smash that like button, and I will see you in the next update. With this, trade safely, guys. Trade stress-free. Trade the mango way. Trade the easy way. Ciao.